Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hey, it is Wednesday. Could be interesting day today. We do have non-defense goods orders, retails inventories, durable goods, etc., etc. There's a good amount of economic numbers this morning. I am out of it. I am late because my furnace is broken, and I've been dealing with all of that. It's not too bad, but it is cold. I usually wear shorts, and I'm not wearing shorts today. Also, there's something in this room smells. I can't put a finger on it, or like I can't imagine what it would be causing it, but I can smell a chemical smell in here. So anyways, let's go to the charts and see what happened overnight. Yep. Okay. So, well, the first thing is that the treasuries are higher. So yesterday we had an auction. And so we had a bit of downside. I made money on the downside, but I think I was just like really flipping lucky because eventually we moved higher, and now in the overnight even further, and we're getting really hardcore steepening as well. Okay, the S&P 500 yesterday started to struggle a little bit. So, what's causing it? I don't know. It seemed to me that I started to see headlines that the Democrats were serious about this unrealized capital gains tax. And a little bit before we started to see the sell-off. And you can see it overnight because of things going on overseas and so forth. We're a little bit lower. Okay. Oil took a little bit of a breather yesterday as well. Natural gas is still up there. I need to look at, I think we're okay. That kind of looks like maybe it's time to roll over. Well, let's just check real quick. Is it time to roll over? I can't keep track of the rollover of every tiny little future. Apparently we do. Roll over. That's a little better. Okay. Gold just got creamed yesterday when the rates rose. But then, the rates got lower. Gold didn't recover. So you always get the bum deal in gold, isn't it? Gold and silver. Yeah. Copper not looking so good. That in copper is a little bit concerning. Okay. Coming over to the currencies, the dollar. Oh, yeah. I mean, it's a little bit strong. They haven't been able to get back into 94. And now this morning it looks like they're hit on the downside. Bitcoin, a little bit dropping below 60K now. That's interesting. I did not see anything in my morning reports about Bitcoin. I wonder why they are down. Because that seems like the drop below 60K would be considered significant. Well, anyways, so the big news, let's put it in the title. Democrats want to tax unrealized capital gains. What are you saying holy crap about, Keller? Is copper a supply chain issue? I haven't researched this, but I would think possibly copper is affected by shipping container issues. No, I mean, so when we're looking at copper, biggest driver of copper is going to be demand from China. Oh, by the way, here comes the news. Let's look at the news. Let's look at what the U.S. core durable goods says. A. Okay, so core durable goods in line with estimates. U.S. durable goods, negative spot 4 versus an expected negative 1 spot 1. So it's actually slightly good, but that has more to do with energy than anything, right? Okay, anyways, let's put it in the title. Democrats unveil unrealized capital gains tax. This debate that the country is about to have on unrealized capital gains is probably going to be a pretty epic debate. And I think that the Democrats are going to get their ass handed to them. Like, I just, this whole concept of taxing money before you've made it, like, if they can do that, what does it open the doors to? So, like, just out of the gate, I'm not sure that would pass constitutional muster, because the constitutional amendment that allows them to do these kinds of taxes only allows them to tax income. And how do you say that that's income? Yeah, Keller says, holy shit. I don't know what caused the crypto crash. Anyways, so I just don't see this passing constitutional muster. But then there's a couple of other things. So let's look at something, shall we? So they think that it's going to generate $200 billion over 10 years. Okay, now realize that their budget is $3.5 trillion over 10 years. Okay, $200 billion. Okay. Elon Musk stock holdings. How much does he own? Or actually, let's do it this way. We can go to simplywall.st. As long as I can write off my 1.2 billion in unrealized losses, yes. So the provision allows you to take losses and carry them forward over 3 years. Still kind of makes you think about things, like kind of a weird thing, right? Insider ownership breakdown, top shareholders. Okay. Elon Musk owns 170 million shares. Oh my gosh. Okay. Tesla stock year to date. Right? Year to date return. Okay. So let's come in here and do some calculations, right? So Mr. Musk, so Tesla, we're going to use a price of 1018 minus 729.77. I've made $288 times 170,492,985. Right? So Musk has made 1,000 million, almost $50 billion this year. Almost $50 billion this year. Okay. Now we'll come here. Now let's just go to the zero hedge story. That's where they were the most on top of it. Okay, we have a historic opportunity. Senator Wyden releases Dems plan to tax unrealized capital gains. Okay. 23.8 times 0.238. Okay. So they're going to make, explain this to me. They're going to make $11 billion just off of Elon Musk just this year, assuming that the stock price stays where it is. Okay. They're going to make $11 billion just off of Elon Musk this year. And they say that it is going to generate how much? 200 billion over 10 years? Where did I get the 200 billion number from? This one doesn't say. Where did I get 200 billion from? Well, wherever I got that 200 billion figure from, it is going to generate way more than 200 billion, right? Like it would probably generate 200 billion just this year. I'm all for tax breaks, but I think the super wealthy should have less tax shelters. It doesn't, I mean, it's not their money though. Like, you realize that, right? I don't. Here's the thing that is so ridiculous about this whole argument about billionaires. Elon Musk does not have $1 billion in his hands. He doesn't. It's not there. Money literally does not exist. It is just a number on paper based on his stocks. If he sold all of that money, it would not be worth $1 billion anymore. It would. You have realize like how much volume, the $170 million. What is it? What do we say? 170 million shares, and he sold that. That would just absolutely tank their stock. It would be absolutely ridiculous if he sold everything. The money that you're talking about, he doesn't have it. He's not. Nobody has $1 billion in cash. Well, maybe somebody has $1 billion in cash, but we probably don't know their name, right? This whole thing about it doesn't work like that, right? Tesla has the money. It's money that is used to fund Tesla's operations, right? What they're basically doing, it's not just they're taking taxes from you. They're literally taking the property, right? It's like they're taking a part of Tesla. Is really what it ends up being. They make new taxes to give the voter base hard-ons, but they don't change the tax code. I really, just the more that I think about it, the more I'm like, there's no way this passes. But like, the Democrat Party seems like totally in on it. Of course. The big argument that's been made, I think it's always the first argument that people are making. So people must think that it's the most effective argument, but they're saying that that it's not just going to be you, right? At some point, like the income tax in the beginning was only on billionaires. Now it applies to everybody. It's just, like the idea that it's only going to apply to billionaires, like, yeah, for now. But then when they want more money, where are they going to go and get it from, right? But Elon Musk, he's going to have to sell, well, actually, so if we come back and we do the numbers, right? So let's just say that it's 12 billion, okay? And the current price is what 10, we calculated at 10.18. Okay. So that divided by 10.18 means he has to sell 11 million shares to raise the money for it, right? Now let's come over here and look at Tesla, Yahoo, Tesla statistics. I think we can do that, right? Average volume 20 million. Okay. So let's say that he would do it over a week, right? So 20 times 5, 100 million. 11 divided by 100. .346 times the multiplier for it, which I don't know. It's not insignificant. This is not insignificant. I would think that yanking the incentive to hold appreciating securities would have disastrous effects on the market. Yeah, well, I mean, I don't think that anybody would like not want to get stock gains because of it, for sure not. But I mean, first of all, for somebody that makes a lot of transactions, that's a lot. That's a lot of taxes to deal with, right? But it is, you just realize the net effect is people. I mean, for trading here in the short term, the net effect is there will be more selling. The market will not be as high as it would normally be without the tax. That's what we can gauge just from looking at order flow, right? Ergo, stocks are selling. I have some food. I need to eat some food, and then maybe I can like really get into ranting about it. Well, if you want to do research, again, if you go to Zero Hedge, this is our top story on Zero Hedge right now. This is why this Zero Hedge is so much better than all the other financial news websites. Look, here it is. Here's the bill. All 107 pages of it. Have fun. Right? But I can tell you, it's a 23.8% tax on long-term capital gains on the tradable assets. Those are stocks that increase in value over the year, whether or not they have been sold. And you can take deductions. So like if you lose money, you can carry forward what you have lost 3 years forward. Okay. So that's the main components of how it works. Right. I have a hard time seeing how there would be any other, like, how is it 100 pages? Oh man. But yeah, legal stuff, has to be wordy to cover all of the possible cases and details and stuff. is a so here's the thing that drives me absolutely crazy about this discussion on taxes. So you're talking about how rich billionaires are and they can have yachts for their yachts and so on and so forth, right? Okay. How rich people are and how well off they are is almost completely irrelevant, okay? How rich somebody is and whether or not I have to pay a tax is irrelevant to whether a tax of that sort is moral and effective economic policy, right? The ironic thing about this whole situation is that the reason that guys like Elon Musk have so much money is because of economic policies that Democrats have championed. They love the low interest rates. Generally speaking, Republicans want higher interest rates and Democrats will want low interest rates. That's generally the way that it works. And would Tesla be to the price that it is today if it wasn't for the low interest rates? No, it would not. This is the result of absolutely insane speculative retail trading that only exists because you can basically buy the dips because of these low interest rates. Yeah, I have very long, delicate fingers. Somehow you can just take up debt and someone keeps those companies afloat. Yeah, it's just the whole thing is crazy. And so what's really happened is they've decided to inject the economy with money by giving billionaires money, and then they're like, "Oh, we want that money back now." That's really what it is, right? Because again, the money it's in the market cap of Tesla. And I kind of wonder, well, you have to pay them from like the year. So like, I guess you wait until the year is over and then in January, February, that tells you how much stock you have to sell. But then the other thing that gets crazy about that is that like, the whole point is to cap their unrealized capital gains, but nobody has that. Elon Musk doesn't have $11 billion sitting around. He's going to have to sell stock to make it happen. So in the end, they do end up being realized capital gains. And then I don't know, does that trigger the other capital gains tax? Do they get taxed twice on it? And then they have to sell even more? And how do you sort that one out? It's a little zany. It's a little zany. Like just the logistics of enacting this policy are a little okay. Right, it's just a mess. It's going to open up so many other questions. It's just a Pandora's box that is probably better left closed. I think I got that from the Wall Street Journal. That's what the Wall Street Journal said about it like 2 days ago. Kathy. Oh, and then Captain Price mentioning Kathy Woods. Did you know Kathy Woods is down pretty big on this year, even though Tesla has been going crazy? She is. I tell you, there's a reason why the best performers don't perform so well the next year. Just saying. Are you gonna get vaccinated tomorrow? I'm still not vaccinated because natural immunity, but because of the federal mandate, like there's a mandate that employers that are contracted with the federal government, their employees need to be vaccinated. Apparently that applies to my company. But then there was this whole thing that was like, if you don't come into the office, then you don't have to be vaccinated. But then they still talking about making the rule through OSHA or whatever that everybody has to be vaccinated if you're in a large company, and they haven't done it, and we don't know if they're going to do it or not. So I may or may not have to be vaccinated by December. It's like, it's affecting me, and it's kind of like, I'm not going to lose my job over being vaccinated or not. I would rather be in the control group for natural immunity, but if I have to take it, I'll take it. But it just kind of makes me mad that it's like the government can force that sort of thing on you, right? And this is where I really think that it's coming down to why I think that the Democrats are going to get so destroyed in this argument, because what Americans are realizing now is that you put the Democrats in power, and all of a sudden, instantly, they're injecting themselves into your life. And I don't think that people appreciate that. So I'm wondering also, because what's going to happen now that it's like a real proposal and it's out, all of the think tanks and stuff are going to put their analysis out on it, right? Reuters is talking 70s stagflation again. Well, come back and look at the Treasury, man. Come back and look at the Treasury. Hold on a second. It seems never ending. Um, I don't know if that's necessarily part of some sort of organized plan to reorganize society. But there definitely people are searching for stagflation. And the reason here, if we get into it, I mean, just look at the 30-year Treasury. So remember here, the end of September or so was when we had the huge increase in rates. Okay. Oh my gosh, my freaking laptop turning on. Okay. Huge increase in rates around September 23rd. Let me use the highlighter. This right here, right? Okay. But look at what happened to the spread. Okay. We steepened a little bit. And then since then, flattened. We've flattened hardcore. And it is particularly strong on the 30-year end of the curve, right? So if we come back over here and we look at the 10-year, right? Not such extreme flattening. Here's ZF. Okay. ZF versus the 30-year. Pretty extreme flattening. Okay. 30 versus 10, 30 versus 5. Flattening really strongly. So what does that mean? Investors think that in the short term, in the next 2 to 5, maybe even to the 10, but not so much in the 10, that interest rates will rise, but that over the long term, over the next 30 years, that they're likely to not rise very much. So what does that mean? It means that the market thinks that the long-term growth prospects are poor. They think that the long-term growth prospects are poor. They're essentially saying that we're going to be in the same environment that we were before. Right? So if we were getting inflation like in the 70s, right? That's something that's going to affect your interest rates for 30 years. Right? The Treasury's not seeing it. They don't see it. They don't think they think that inflation is transitory. Where there's kind of comes down to this interesting semantics game, right? Oh my gosh, where'd my mouse cursor go? That's freaking annoying. The China media yesterday said the current administration is the most incompetent and degenerate in U.S. history. When you say it's organized, like here's the thing, it's not possible for you to have that level of coordination on something, right? You can't sit down and say, okay, now next month you need to put out that you need to have 3 vaccines. We, the world order, have declared. It doesn't work like that. It comes down more to individual and organizational incentives lining up and people doing actions that line up with a certain outcome, even though none of them are actually even thinking about or even going for that outcome. It just happens to be that that's where their interests lie. Vaccine makers have a vested interest in selling as many vaccine doses as they can. Ergo, they're going to argue in favor of getting booster shots. And it seems that the political apparatus around health as well has aligned with them. And so that's how you get these situations where they're like, even though the scientists are not recommending that you require booster shots, they still approved it anyways, right? No. Coordination would mean that you went and you talked about it and you all have a plan to do a thing. That's coordination. Right. Coordination is that the secret cabal of world leaders and rich people say, okay, you need to keep vaccine mandates and lockdowns on until we've taken complete control over the world economy, and then you can take them off. And there was a discussion where they actually had that. That's what coordination means, right? And you can't coordinate things like that. It's too complicated. Well, you go and read those quote unquote frameworks and see the policies that they recommend. It's one of the policies that they have in that we need to force everybody to keep getting booster shots until all small businesses are destroyed and we've taken over the world economy. Where does it say that? Right. Need to clean my mouse pad. Let's close that and that. I don't need that. Anyways, I don't know. It seems the thing that's kind of difficult for me is that in Utah, we've been open the whole freaking time. You know, like this intrusion into my workplace is like the only visible thing about it to me. So I can't see what they're doing in other places. They're still hurting small businesses in California or whatever the deal is. Because I look at it and I see it's over. It's over to me. It seems like the stock market thinks that it's over. Yeah, Keller, you have a good point. At first it was, as soon as the Democrats are in office, the coronavirus will never be heard of again. You're totally right? So many Donald Trump supporters, it was a really common topic thing that they would say on patriots.win, on the Donald Trump forums, that they would say the pandemic is all fake. They're just making a big deal out of it so that Donald Trump will lose. And when he loses, then they'll forget all about it. And that did not happen at all, did it? But that was because there actually is a pandemic and it does have serious health consequences, right? And we had a pretty big surge this year that was bigger than the original surge. So, yeah. But it always goes back to the question, though, of like, one, are the things that they're doing to, quote unquote, combat the virus really effective at combating the virus? And two, is it worth it? The second part is the one that ain't nobody done anything about, right? You'll see all of these studies about should we do social distancing and masks, how do masks work, and the lockdowns, do lockdowns work, and there's a lot of interesting discussion both ways. I haven't seen anything about it recently. The last time I saw something, it was basically like, yeah, we did all these lockdowns, but you still got the second wave, and you got everybody vaccinated and you still had the second wave, and it was still really big. How bad would it have been if people hadn't have been vaccinated and everything? I don't know, but Vincenzo, no access to past live shows now. No, that is not true. So if you go to my channel here, I will show you. I don't know if this is the right thing to do. You tell me. If you come to my channel and you scroll down, there is a playlist for live streams. So you can come into this playlist and every live stream I've ever done is still in there. But what I have been doing is, yes, I go in afterwards. Well, not afterwards. There's actually a setting for it in YouTube. Funny enough. Where is it? Oh, where did it go? Where did that ending go? wonder if they fixed the redirect thing. No, they didn't. Anyways, but yeah, okay, so I set it to go to unlisted when the stream ends, essentially. Oh, it's in stream settings. There it is. Unlist live replay once stream ends. So they're there. They just don't show up in YouTube search and so forth. Right? So the advantage of it for me is that when you come in here, okay, I've got these things, but like if I go to uploads, I want it to be my most recent videos, not all of my live streams. When YouTube recommends you a video, I want it to be one of these videos, not a live stream. Because what will happen is people will click the live stream and they go, oh, this is the one I want to watch. Right? And when I come to this video page, I want it to be the videos that I've made, not my live streams. So that's why I did it. I wish that the live stream still showed up in YouTube search. I don't think that it hurts the channel by them showing up in YouTube search. It's just like cleaner this way. So that's why I started unlisting them. I don't know if that's the right decision. I don't know if it hurts or helps the channel, but there's absolutely no intention to like hide past live streams or anything like that. You can still find them. You just have to go to the playlist, right? Keller says we never truly reached a proper lockdown. That's why it's kept going and going. That's also why it was no. like here's the thing. China took a proper lockdown approach. Guess what? They still got it, right? It's just you can't stop it. I think that there are some people that have this idea in their head that if everybody I remember hearing this in school, frankly, from a teacher. I remember when I was a kid. If everybody locked themselves in a room for a month, then like all human communicable diseases would disappear. No, doesn't work that way. It's simply not possible. These diseases are infectious enough that you can try and be as draconian with your measures as possible. You're still going to get it. And you can see what is happening in Australia and New Zealand, right? They did like as strict of a lockdown as I think you can possibly get, where it was like arresting people for being outside their houses and having people with guns on the streets and all sorts of crazy stuff in Australia. And then they still started having infections, and eventually they said, oh yeah, this isn't working. Just like we said they would, right? So, but here's what I let myself get distracted by that one question, but it was an important question to address, right? There's been some good studies about are lockdowns effective. I think that the most recent stuff that I've seen suggests that they're not really that effective, that you're just kind of delaying the inevitable. So lockdowns as like a flatten the curve seems like that might have some efficacy, but lockdowns as in like crush the curve, COVID zero, absolute insanity. But here's a study that you never see. What's the actual cost of it? How much money is being spent per year of life saved? That's the metric I want to see. How much money did the world economy lose per year of life saved? Nobody wants to do that kind of analysis because it sounds kind of like, creepy and non-empathetic and everything. But guys, when we're talking about society on a global scale, you have to look at these things. You have to look at these things. And it's not worth spending $1 billion per year of life. Okay? Especially if we're talking about older years of life, right? Quite frankly, nobody wants to say it, but there would be a lot of economic benefits to some of the older people moving on. Okay, There's a lot of people in my generation that I have problems because boomers are overstaying. They're not retiring at 60. They made mistakes and they don't retire. It's a big problem. I think it's so funny. You guys would rather talk about the coronavirus than you would about the Democrats' capital gains tax. What is with that? What's the stimulated stop limit order and how does the volume trigger affect it? Okay, that's a good question. It's a good beginner question. Okay, so if I bring this over, let's do the 10-year. Okay, so if I do over here in the 10-year and I put a stop limit order, okay, I'd say a stop limit order because I don't necessarily want to hit into this one. Okay, so if I say this number right here, SV is 400. Okay, so if I place the order right here at 130.30, okay, now I have a stop limit order has been placed. Oops, my little thing moved because I clicked on it. Okay, my stop limit order has been placed. So what it means is if the offer at 130.30 gets below 400 lots, then this will turn into a limit order at 30. If I did a regular stop, then it would just turn into a market order. So I would maybe hit market into 30.5. So if I'm going to do it to enter a position, probably best to do a stop limit order. Now, in this kind of a situation, I'm going to teach you some advanced stuff, right? In this kind of a situation, what's going on right now? Where is the small? Okay, there's almost always going to be one price that doesn't have very much volume on it. Okay. Oh, it just changed. Okay. Well, so here it happened. Okay. Look, my order triggered, but I'm 706 in line. Right. And I didn't get filled, even though, wow, 1,000 hit back into it. Okay. So look at it again here at 30.5. There's a lot less at 30.5 than there is 30. Right. So the probability right now is that they will tick up, or maybe better example in the 5-year. The probability is they're going to tick up. Man, stop changing. It's changing too much for me to explain this. Market is changing. When there is less, okay. Oops. Oh, it didn't automatically put my orders in, so I will put the take profit up there. Okay. Now we're doing it at 30. Okay. The probability at the moment is that we'll tick back up. Okay. And then some orders will cancel at 30.5. Right. But then if 30 does start stacking and they trade into 30.5, it's gonna, when it ticks up, there's gonna be a bunch of people trying to get in line here, right? It's all about trying to get a spot in the queue, right? So because I put the limit order in there, you know, I was one of the first people to get filled. Now, it would have been better if they had not ticked back down. If I had gotten filled and they did not tick back down, then that would have been great. And then maybe I could have just taken one tick, right? That's what I was trying to get at. Maybe that was a little bit overly complicated for someone that doesn't understand a volume stop. But so let me just go back and reiterate. What the volume stop does is if the volume gets under a certain amount. So here, if they get under 400, then I'm going to puke. Then I'm going to puke and I'm going to get out. Right? So we'll see if this one, if it works out, if there was a continuation or not. I wasn't saying that it was like a trade per se. So I wasn't seeing the kinds of inefficiencies that I look for when I'm trying to take a tick out of here. But it can show you how using that kind of an order, especially in the ZN, can provide you an advantage. Yeah. Because it will automatically try and place it right as we're ticking up. Right. So I'm able to get a spot in the queue. Even if I don't get filled, I'm able to get a spot in the queue that I otherwise wouldn't be able to get, right? I was 700 in line versus I would have been 3,000th in line. Right. And that's the advantage of of the stop volume order. What was your video with your chalkboard on different trading backtest formulas? Oh, yeah. Performance metrics. Wow. Okay. So look at that. The really strong stack at 30 looks like it can get filled. Yep. Cool. One tick. That's how it's done, folks. That's how you do market making in the 10-year treasury. It's just, you've got to have something that really tells you that it's going to go up to the next tick versus down to the next tick. In that kind of a situation with that amount of volume and pushing new highs, maybe it can happen. Yeah. So if it was 1,000 and there was less than 1,000 on there. So like right here at 30.5, if my number was 1,600, then it would have triggered, right? It would have triggered right there when it dropped from 1,600 to 1,200, right? So you'll see that it kind of balances to certain levels. So this is another interesting thing that you ain't gonna hear people talk about, but is actually a super interesting topic. Oh my gosh. Okay, so here's the thing. You want to think about three forces, okay? Market orders, limit orders adding, limit orders canceling, right? Now, here's the thing. You go in through the current market state, right? And we can come in and we can say, maybe in a minute, 100 lots cancel at 31, right? Or add at 31. We can say, on average, 100 lots add, right? But that number is staying pretty constant around 400, even though it's kind of, well, let's do 31. Let's do 31. It's at 45, right? So it's going down by about 100 and it's going up by 100. So on average, there's 100 adding and there's 100 being taken off, right? And it balances out to the same price, right? So why does that happen? Well, the more lots there are there at a spot, the greater the probability that at any given moment, one of them is going to cancel, right? The more liquidity there is, basically the more little changes that you get, right? And so because of that, the math of it basically means that there are spots that it will get stuck at, right? So basically it will tend to balance out around 47 or 40, right? And so there are kind of these steps that you will see in the treasury. And I mean, it changes from day to day, but there is some consistency about it, right? So at around 600 and less means that we're really likely to tick at that point. If there's only 600 lots, if there's less than 600 lots at 29.5, there's a really good chance that they're going to tick up. Okay. Really good chance that they're going to tick up. That time only 900, they ticked up, right? Then the next step is going to be about like 1,600 or so. So like if we move, the minimum amount that the robots tend to put out is like 1,600 or so, right? But that's still kind of in the territory where it's moving around a lot. It's doing a bunch of stuff, right? And then the next step is about 2,000, right? So 2,000 is a solid stack, and then you get to 2,500 and like 3,000, and then the full, which would be like right now 4,500, 400 to 4,500 right now, right? So there's going to be a tendency, just because of the math of orders adding and canceling, it will balance around these certain areas, around these certain amounts. So that's where you can come in and you can kind of judge, okay. And I would put a random number in there. I would put a fairly random number in there. I have 400 on there right now, but it should probably be more like 431, so that it's, because what will happen often that you'll see is that the market makers kind of test you. They will say, okay, I would really like to get filled at 29.5. How low do I have to get it to get people to start hitting into it with market orders because they think it's going to tick? And you can see right there, that's exactly what happened, right? 1949 went into it and it didn't tick down, even though it was only like 900 at one point, right? Why? Because there was an iceberg underneath there. So there was pulling to test and people hit into it and got stuck now. Now, if they want to bail, they have to get out at 30. And then you'll see them. If they tick up at 30, you might see them bail. Is the simulated orders place you locally? Yes, it is. So that means that once it sees the level 2 change, it will send a limit order at that price synthetically. So there is going to be latency involved in it. That's why you could see that, like the best I could get was 700 in line. And that was after 1,000 contracts traded, right? But anyways, because there's kind of those points at which the stacks will kind of balance around, you can use that to adjust your stop volume accordingly. So if I'm really trying to take it as she goes, I might put 600. I think right now I would want to be around 600. 400 is a little low. 400 is like what it was a few months ago. I never took a statistics class in college. I have a book, though, for statistics I want to get through. But I think I'm going to read Dune first. Anyways, so at the moment, by the way, like we had that tick up, but you can see that they're kind of rotating around in this area. So we appear to be in an area where I don't necessarily want to take a trade at the moment. I caught my one tick. Now it's likely to range there a little bit for a while, especially given the time. We're here just before the equity markets open. I don't know. Yesterday, the equity markets looked very mad when they was selling, right? Oh man, the downside action looks so different from upside action, doesn't it? But that was not happy, and I'm a little concerned about them selling again today. I think that the typical play would be buy the dip, but I think today I need to just kind of sit and watch and see what it does. We don't have any ace here with us, but maybe we could try taking a scalp in the ES. Crystal ball probability theory. Okay. Anyways, so when was we were talking about stagflation before we got into that, right? So here's the thing that's interesting about stagflation, I think, about the current discussion that we had. So there's this phrase that Milton Friedman would always say, that inflation is always a monetary phenomenon, essentially saying that when you get inflation, it's always caused by policies at the central banks. So I don't think that he was necessarily a really strong proponent of central banks. Let's put it that way, right? So here's the thing. I really like Milton Friedman. He was not right about everything. Okay. The one that people don't realize about Milton Friedman, okay, the thing that brought him into prominence, the research study that he did that gained so much attention and made him, that people wanted to interview him and debate with him and so on and so forth, was basically he said that companies should do what is in their best interests. Essentially, he says they should do what's in their best interest, and it's the responsibility of government to set the law up as such to protect the public from what the companies might do. And that is not what U.S. law says. That's the thing. So he wrote the paper that made him famous. The U.S. court system basically says he's wrong. The U.S. court system says that companies have a obligation to do what's in the interest of the general public. So he was wrong about that. Not everything that he said was golden. Like, he made very, very effective arguments against socialism and stuff. But then, like, he also supported a basic minimum income, right? That sort of a thing. So he wasn't right about everything. So I do not agree with him when he says that inflation is always a monetary phenomenon, because the reality is that inflation is something that I think is a little bit kind of iffy to measure, right? Prices change. The cost for goods changes and can go up or can go down based on the orders for them, right? Whether people are buying and selling, and the balance of power between those things makes the price of assets move. And so it is entirely possible that you can have a broad group of assets all move up in price and it have nothing to do with the monetary policy. We come in and we measure these things because we say, here is the price of things that people buy and that are important to consumers. And are we getting inflation? Because in the end, inflation just means prices are rising, right? But when the layperson thinks about inflation, they're really thinking about prices are rising because of monetary policy, right? So are prices rising because of monetary policy? Well, no. Prices are rising because of supply constraints. Are those the fault of the Federal Reserve? No, right? I think the only argument you could make there is that the interest rate should be higher and reduce growth so that the growth is in line with what the supply chain can handle. In other words, you would basically be arguing that we should be in a recession right now. That would be better for us to be in a recession, which I'm not so sure that I can agree with, right? Thus enters the stagflation fear, though, because if it really is a monetary policy thing, or even if it's just sustained, I mean, those are both of those situations, but we say it continues. Right? It's not just going to be this year and the next year. It's going to be the next 5 to 10 years. Then we have a real problem, right? Because you're going to have prices continue to rise, but we're not going to be growing. Like, people are still going to be struggling, and the actual GDP growth is going to be quite low, even though the prices of everything is rising, and so you get stagflation, right? And this has always kind of been the concern. Has been like that the Federal Reserve has been keeping interest rates low because there's the concern about deflation. But then if that ever turned, and it wouldn't take much for that to turn, that we were getting inflation. And now all of a sudden you have to raise rates into a weakening economy. Right? And that's what people are so concerned about. And so then you have to go back to the monetary policy argument. If the inflation is being caused by supply constraints, then is raising interest rates going to solve that problem? No, it's not going to reduce the bottleneck. It's just going to hurt the economy. And I guess you ease the bottleneck because there's less economic growth, but is that really the goal there? No, not really, right? We want to maximize economic growth and keep inflation to our target, right? So this is kind of the odd debate, right? But the Treasury market very clearly seems to believe that the Federal Reserve is right. They think that deflation is the bigger concern long term, and that there's nothing that they would do economic policy wise that would fix these supply constraints. So that's the deal with inflation, right? So in the end, what I'm saying is, like, a lot of people are searching about stagflation is because they're misinformed. So because they're misinformed, because they see the prices rising and they immediately think that Federal Reserve, right? But the evidence right now, I don't think really supports that. NQ Strongfest? Well, so for the moment, we're down. I don't know if that's a great place for me to take it, but I'll put one right there. Because it was, well, how much was it? Only about 2,000 contracts short on the open, but there was a decent amount of orders going short. And you can see over here in the treasuries at 31.5, they're still kind of reaching for higher. There's this one right here. This is kind of a risky. I need to change it up. I'll put my one tick out here. It's already too late. I was going to say, because there's that iceberg there at 31.5. You might be able to get filled at 31 and out at 31.5, but too late. And it looks like I'm already too late on the E-mini too. And if I get filled at 67, it might not be the greatest trade. Because it's just leading lower and lower, and the treasury is moving up and up and up. How do you think the market would shift if the consumer population began buying experiences and not products? Well, that's been happening for a long time, though. But the pandemic stopped some of that, I guess, huh? I don't know. There's definitely something to, like, the thing that I think is so weird about this supply chain problems. A lot of Republicans think that it's all Biden's fault. I don't know, they live in this world where everything has to be Biden's fault, and they're saying, well, there's a labor shortage and that's why we're having. No, it's not. The simple fact is we are pushing through like 20% more stuff than we used to, right? Supply chain is not that flexible. Man, the treasury is just going and it's just pushing another tick and another tick. Or are we going to have, it is. Like we're having an unusual move in the treasury there. You could maybe sell from 0.5 to 131 even, but that one's, it's against the trend. It's a little hairy, you know what I mean? Well, you would be filled. That we didn't see any orders hit into 131 even. By the way, what's that dollar doing? Dollar not really, well, rising a little bit. ES not reaching levels yet that are like a huge concern either, right? So it has not turned full on bear. That doesn't mean that it's not gonna. I don't want to cancel that order. That's not happening. Yeah, that one's a continuation. Well, I'm kind of thinking if they come back up here, do I still want the short? Now you would have gotten 131. Okay. Did not get filled on that at 0.0 quite the way that I would like. Too much stacked when it went through, right? So there was 1800 on there when it ticked up. That's not what you want. Well, that's better, but I'm not getting a lot of orders. Now I could scratch it. I might be maybe being a little too stubborn here. There is a little bit of iceberging at 0.0 though. It looks like my the spot I picked there in ES was no good. Oh, cool. I got filled. Did not take much, did it? So one thing was that I knew that the liquidity was kind of pulling in all this area and that they were iceberging. So that kind of suggests that you can actually get a better spot in the queue than it appears, right? Like it seems like your spot in the queue is at 41.55, but if any volume was starting to tick into there, it would probably be better, right? Probably a good 2,000 of that would cancel. You see what I mean now by like you want to monitor the orders stacking and the orders taking off, and how do you see that in the chart? So where your spot in the queue matters a lot. Now on the split side of this, I'm kind of wondering if we aren't going to get some rising rates here now. We have some auctions today, don't we? Let me come in here and look. Oh, I closed it. Let me open up my little news economic releases thing. 2-year French auction, 5-year no auction. Okay. So we've been getting bullish action on auction days, right? So that kind of make one thing that might make you think twice about shorting these treasuries, right? It does look like the E-mini is recovering. They didn't go through the big ugly spot. I don't know. I could flip around and buy it, but let's just wait here. Oh, we do get Bank of Canada monetary policy report at the top of the hour. Introducing Nanos by CBOE, smaller and simpler options designed for retail traders. Oh my. Oh my. Cash settled. So there's no delivery of physical shares and European style. No early exercise. Oh, are these... No, they are options. And they're launching Nanos S&P 500. One hundredth of the size of an XSP option. Well, I don't know. Doing options trading with nano contracts sounds interesting to me. Is spot gamma good for options expiration? So the spot gamma levels, at least in the current market, are really useful. Yeah. I don't pay for that service, but I would say that it's totally worth the what is it, $20 a month or whatever it is. Maybe it's more than that. Okay, so you can see there, the S&P 500 recovered, but I'm not seeing the selling in the treasury that I would expect to see. Because we were moving up on like the risk off. So is it that the treasuries don't believe that? No. There's an auction, and they've been buying because of the auctions. In fact, so interestingly enough, yesterday, important thing yesterday, in the 2-year auction, there was pretty good buying. It was a pretty good auction. But you know why it was a pretty good auction? Because there was so many shorts covering. So, you get what I mean? Like, this could be another one of those, it just goes up all week and then next week it plunges. But I don't think that we want to try and sell rates here. No, don't. Could go, but I don't really know where it's going to go or stop, so. People talking about Shiba. Has Shiba surpassed the market cap of Dogecoin yet? Nope, not quite. Oh, they've still got a ways to go. They've got $7 billion. No, wait. 100,000 million. Yep, $7 billion to go. No, I thought that that SHIB got crushed because Elon Musk said that he doesn't own it. Oh, it's been going pretty good the last 7 days though, huh? Oh yeah. Oh, somebody is pumping this, man. Yeah, this is gonna end badly. But I think that they could surpass Dogecoin first. Oh, what will happen to Dogecoin when they get surpassed? Oh, man. Pelosi is whipping. In order for the BIF to pass, we need to have the trust and confidence in the reality of the Build Back Better bill. In the next couple of hours, I will be communicating with you on our path from here to there, depending on what happens at the White House. That will determine our timetable or course of action, but we are in pretty good shape. Yeah, the equity market's rebounded pretty good. Okay, so there was a significant downtick at 31.5. It didn't tick in a way that makes me think that it's gonna like really stick, but at the moment, it looks like we're gonna get the rates are gonna rise again, or the S&P 500 is gonna take another plunge. Which one do you want to bet on? Yeah, it's still iceberging at 31.5. Also, there's kind of an issue with timing of the day here in terms of trying to take a trade at the moment. Oh, did Taleb say this? Consider that if we established a capital gain tax on large unrealized earnings as a draw against future realization, we could pretty much close the deficit. At 45% federal plus state, just the owners of Tesla would owe $500 billion. Unless, of course, it collapses the market. Yes, that would... The entire market collapsing, that would probably not be a good thing overall. In order to see what the aggregate effect on the market would be, like if it's supposed to take out 200 billion over 10 years, then times that by 5, and that's how much it should affect the overall market cap. But when you look at like the overall market cap, or like how much market cap gain per year, I think it's a relatively insignificant amount. So, I don't know. I'm reading back through my Twitter history. Bitfinex stablecoins are going to be subjected to harsh regulations. The harsh regulations are going to be to make sure the stablecoins are fully backed by stable assets and that they are not secretly raiding the reserves or gambling on unsafe assets. Harsh regulations, right? And then the crying laughing face. Yeah, that's exactly it. Isn't it so crazy that like just forcing them to like have their stable coins be backed could be a huge disaster for Bitcoin is a little crazy. What are you saying, Gus? Oh, okay. So yes, you're right, but you're wrong. So if you go into the options, there is an option to make it to filter it to only buys or only sells. So if you want to have one that's only buys and one that's only sells, then what you would do is add 2 of them and then have one be filtered to only bids and one filtered to only asks. Yes. Yeah. See, it's just it's very flexible once you get into the options. Once you realize the number of data series that are underneath there and stuff like that, yeah. Okay, I got a fill. That's good. I got a fill. So I was kind of looking at the treasury, and the treasury kind of was indicating that like somebody wanted to sell, but they were holding it. So that kind of made me think maybe this isn't for real in the ES. And then it turned and I decided to take a gamble on it. So we'll see. We'll see. Wow, that's a lot of contracts for NQ. Or wait, yeah, is that NQ? Yeah, it is. Well, E-mini's kind of suggesting that they're maybe not completely done. An E-mini ticking down now. So they may have fooled me here. Let's see. It's still kind of a tough call, I think. The single best day of the year to buy the close and hold for the next 5 trading days is tomorrow, October 27th. This is Ryan Dietrich, retweeted by Carl Quintilla of CNBC. That is very, very interesting. Okay. E-mini maybe gonna reach for my stop. Yeah, it gets that close. It's pretty much guaranteed to happen, huh? Yeah, there you go. Okay. Well, I do see oil up. Yeah, and there's another tick. I'm not so sure that I like the prices that I'm getting here. It's like 7 ticks for, I guess it's okay. They are kind of pushing and stacking and not actually getting the sell orders. So that also has me a little bit. Maybe I'm just being too cautious today. I don't know. What do you think? Now we should come over here and check out the WAC. Yeah, the WAC is down off of the open, almost back to 55. 55 being where they ended on that first day. So if they start pushing below that, then they're starting to eat into anybody that's really held. So it gets a little more fraught. Okay. Nope, maybe not. As soon as I'm like, it looks like it's turning down now, and the ES is like, no, we got a couple of limit orders here. We're gonna stack and push things up. I think it may just be conditioning from the treasury, but you notice I really, really hate it when I take a trade in the ES and the first move that they do is excursion against me. I don't like that. But I did the same thing in the treasury. In the treasury, if it's like against you almost immediately, like a tick against you, like you did something wrong. Like, not that you did something wrong, but you really would like to just have no excursion. Oh man, Meghan McCain. Lindsey Graham may consider himself a member of my family, but he is not, and he hasn't been for a very long time. He certainly doesn't speak for me or my life experiences, full stop. The media should stop treating him like he is an expert on anything McCain related. Oh, I wonder, you're Lindsey Graham, what you say to that. Well, probably you don't say anything, but come on. Okay, Emily is defying me on the shorts. I think we could afford to try one more time. Win along. Yeah, sure. Why not? Why not chase it? Why not? Why not? So here comes the Bank of Canada decision, by the way. Okay, no change. There was a little bit of volume there. I just should have bought that. I don't see anything in the Bank of Canada statement or anything that really makes me see why interest rates just went off like that. I could have made money if I had taken the buy that I had been considering. We are transitioning from QE to reinvestment, and it will now buy Canadian government bonds primarily to replace maturing bonds. How many levels does the pulling and stacking consider? There's a filter for it, right? It's so there's the min and max filter, and then there's a level filter. So the level filter is how many away it is, and if you leave it at 0, then it's everything that it can see. Yep. I tried to explain that in the documents on the website, but I know it's a lot to look at, and the documentation is as clear as I tried to make it. I know that there's going to be lots of questions. So yeah, if left at 0, then it's just everything. Okay. If I have you here, it's less than 1 minute, right? I wish I had more time to put into it because there's a couple of things that I think we should be adding in, but the E-mini defies me once again. So that's it for me on the E-mini. That's 3 of those. Just a sim, but still disappointing. Why felonies and cheeseburgers will keep Donald Trump out of the White House, says Joe Scarborough. What? So that 5-year was going for lows there. It still looks a little illiquid in the 5-year. You know, like they could tick back up at 27 in the 10, 25 half in the 5. You know, that could happen really quickly. So it's kind of hard to read too much into any up tick or down tick since that Bank of Canada decision. It's just been sliding around a lot, and it's really unusual. I've never seen the Bank of Canada decision affect the Treasury market so much. It's almost always a non-event for us. It's usually a non-event. Some stacking there, apparently. Oh, actually, it was a pull at 26. Yeah, they're dinking around with it there at 26. I don't like that. My oh my. My oh my. Well, looks like I'm wrong on that one. A very unusually large move for the Bank of Canada decision. I don't understand what it was. It cuts domestic growth forecasts. We are ending our quantitative easing program. Okay. So the whole thing about they were waiting to see what happens at the White House with the talking to the moderates are both meeting with President Biden. That's in 30 minutes. Bank of Canada, the realization of inflationary threats could lead to an increase in inflation expectations as well as more widespread labor cost and inflationary pressures. So big order stacked at 25. If we tick back up there, I'm going to be interested to see if it pulls, because I kind of suspect that it will. Yep. Some of it just moved up. Okay. So the stuff at 25.5 not reacting to that. Doesn't reset it, so we got it right there on that. The USD CAD falls after the Bank of Canada decision to stop bond buying. Oh, okay. So is that largely a currency move? Do you see the dollar sliding here? Let's make sure we got that up over here now. The big order at 25.5 not there anymore. Big Toasty, hello. Well, I think I've got this wrong. If this bottoms, it could flip back up really hard, but especially with the auction going on and all that. I don't know, man. Dollar changing a lot. Yeah, see, they make a little bit of gains and everything, but then it's like they get crushed. No, that's not how you want to get filled either. ES is still like there was a really good down move at the open, but like since then it's just kind of going nowhere in ES, isn't it? That's probably really frustrating for the equities traders. They're able to make 23 and a quarter go bid, but like there was only like 40 lots that bid it. There's definitely currency moving this. I think that maybe what's confusing me with the order flow here is that it is moving because of the dollar, but there's a lot of people trading for other reasons like the auction and so forth. And so I'm still seeing kind of this volume and it maybe even possibly moving up and stuff, but then the currency buries it, right? Like that. Jeez. Nah, I think it was because that was just some real volume came in selling. So, probably just need to sit on my hands for a little bit because I don't think that I really know what it's going to do next. I think that last one I was kind of guessing. I mean, I do see some orders like coming in and taking it and stuff. I don't know. How frequently does it update? Well, you can change it. But I think that they're all set to go on each tick. So you'll see the current bar will adjust based on what's currently happening. Look at that. I could have bought it there. So now that's a big amount of volume going at 2020 half. Wowee. Okay, big strong offer at 18 half. Oh my gosh. Missed it. So I was watching that. I was like, they're going to bounce back to 20, right? Did not get a good price, though. I really should have been getting 60. Okay, so a lot of volume 20.5. That going to be a 10K iceberg at 20.5? Okay. So 20.5, it was 7,000. Now at 21.5, are we going to get... What's that one going to be? Well, both sides are stacked. Look at that. 9,000. Big stack on the bid, though, when they took it out. Yeah, he wanted that one. Good morning, Bub. China's state planner market regulator will crack down on illegal behaviors such as spreading false information of rising prices. Oh, guys, you can't say that prices are rising. The Chinese will come and get you. We had a couple of big transactions on the way back up here. Okay. By the way, on this move, the curve once again flattened in the 30-year considerably. The 30-year really didn't go all that much. The 5-year did. 5-year, it was really quite stunning, in fact. Okay, now, despite that big swing back, well, and the dollar is moving back up. The dollar is recovering, actually. The 6J took a beating, but the dollar is almost back to where it was. And the E-mini below, they're open again. Well, this is not too serious. I haven't been doing well in the E-mini, but I'll take a YOLO over there. Mansion says a deal absolutely can be reached today. Would Mansion really be on board for unrealized capital gains tax? That would be really interesting. Okay, 22.5 goes bid solid. 23. No, not yet. Teasing it. There we go. Okay, 1343. That's a solid take. Strong stack at 23. Yeah, this is trending back the other direction really hard. And how are we doing on volume? Oh, yeah. Okay, so this... But believe it or not, there is a chance that this goes back up to the high of the day and beyond. There is enough cumulative delta on this move up that it could go to a new all-time high. It looks like it is equal to or larger than the amount of volume that's sold on the Bank of Canada decision. And, you know, there's the whole inverse sine law, right? Is unrealized profit only considered when you pull the money out of your trading account at the point in which you buy back? So I think that what they're saying is that you would have to take all of your assets, how much you made at the end of the year, and then you would be paying on how much you made from the end of the year. So they would basically be looking at every asset that you hold and what they're worth. Nasdaq Trader says it doesn't matter. Markets are random. Well, they're not random, but they're close. There are, I can think of at least 4 properties about markets that are not what you would expect from a random walk, right? Volatility clusters, orders cluster. Large meta orders have a square root impact. There is an inverse sine law that increases the impact of orders if they're they are of an opposite sign. And there is a small autocorrelation effect that if for a buy order, there is like a 0.5% chance that 24 hours later that higher chance that they will be still trending in that direction. Yeah, so it's regardless of whether you move the money in. Because the whole thing is they're saying Elon Musk would have to pay $11 billion in taxes this year. Essentially. Okay, so they came back up to that like 25 half area, and they actually ticked through it and into 26, but then backed off a little bit. So that appears for the moment to still be resistance. Coinbase support. We are currently expecting connectivity issues that are causing display issues on asset pages for Coinbase.com, Coinbase Mobile, and Coinbase Pro mobile apps. Our teams are on it and investigating. Your funds remain safe while we work on a fix. Reed, if you want to get out, you can't right now. Good luck, Bitcoin. Jack says tax on unrealized gain looks crazy, but I'm not from the US. Yeah, I mean, so even though you're allowed to like carry forward losses and everything else, it really sounds like a nightmare logistically. I think you're opening up a whole host of issues. So it really seems like a. Okay, so there was a build on the oil numbers. That's pushing them down. Anyways, I really think it's telling that the Democrats are getting to this point, right? That they have, that's the sort of thing that they have to resort to find the revenue. I'm not sure that it would pass a constitutional review, because there's been court cases specifically about what constitutes income, and if you haven't sold yet, I don't think you can consider it as income. So I don't know, man. Okay, so now they're trying to push through the 25 half pretty aggressively that time. There is volume there though, right? It's not just cutting through it. What do you mean by property tax would disagree? In my mind, property tax is like the one tax that makes sense. You live here, so you have to pay tax. That's it. Like the income taxes, you know, that was not what the country was founded on. Oh, if the value of your home goes up, your property tax goes up regardless of whether you sell or not. Well, that's true. But that's kind of an interest. I don't know if that's comparable or not. Let's see. I think the issue with it is that if the value of your house goes down, you don't incur actual monetary losses from it per se. I don't know. I guess, do you incur actual monetary losses from it when it's a stock? I don't know. If we have a trading, I don't know. There are some interesting tax loopholes with Puerto Rico. Now, there are certain taxes that don't apply to Puerto Rico residents. It's kind of funny. It's kind of really narrow, but there is a loophole with Puerto Rico. I want to hear Manchin or Cienma comment on the unrealized capital gains tax. Oh, yeah, okay. I was looking over here and I'm like, what? I made $32? No, oh, that's my S&P 500 trade. It's running. Cool. It's come back on it quite a bit, though, as is this treasury trade. So I'm kind of tempted to add, but then I look at it and I'm like, if I added, then my position was here, and yeah, no. That I don't think that makes sense, because that is about where it might go back to, because there was all that volume down in this 20.5 area, right? So we could bounce back to 20.5 and then back up to 26. It's possible. Although I think the more likely scenario is that we range here for a little bit and eventually push higher and back up to the highs of the day. I don't know if we'll actually get to the high of the day, but the volume is definitely there to make it happen. I suppose that what I could do is I could say, if we come back out here, take it off and then let it come back and get back in. The micros look awfully slippery. The treasury not so much, but the micros are being a little slippery. Ouch. I think that one was because of correlation, but did you see how it was like 2000 and then they traded 770, pushed it down, and there was a big stack almost immediately on it. Somebody that bought at 24.5 is unhappy right now. I tell you what, though, if the unrealized capital gains tax is in the bill that passes in the House, it's going to be, I think the market's going to throw a fit. It's not going to be like a huge fit, but I think that they're going to throw a little fit here.
Block sell.
Okay, interesting. Block sell at 22.5. Corn is flying? Really? Yeah. That's ZS, right? No, that's not. ZS is soybeans? I can't remember it anymore. It must be corn, because why would I have it up there otherwise? Let's see here. What's the ZC? ZC is corn. Okay. Yes. Up 2.67%. That's a lot. The 2-year is up 7.13%. What? Really? The 2-year really moved, huh? Oh yeah, it did. Wow. Okay, so despite all of the large orders and everything at 22.5, it looks like they're pushing back towards the 2026 area. There's some big icebergs both ways. Is it turning into Iceberg City? ZS, it must be soybeans. But soybeans is moving too. So when I look at correlations, it still looks like that the dollar was a significant factor behind the initial move. And I'm seeing that the treasuries have recovered, but none of the currencies have. Man, they just cut through that 24 to 24 half area now. The big order at 22 half in the 5-year that they're thinking about. They're thinking about it. Somebody nibbles. Okay, they take it. It trades, but they take it. Oh, big stack at 22 half. Okay. So some big stacks there. I am just at this moment realizing that this has got my adrenaline going. Like I paused for a second and I felt my heart beating and I was like, oh, this is a little bit more intense than I realized. Because at the moment I'm feeling a little bit more like okay, it's doing what I thought it was going to do, you know. So I'm feeling a bit more relaxed. Now this move up, by the way, this move up did not have positive delta associated with it. So let's remember that. 22 half, still the big order. It's even bigger now. It's 3,000 lots now, 22 half in the 5-year. A little bit slicker there after we passed through it, though. Some aggressive orders being placed. What was that one? Okay, that was a pull. So we're starting to see pulls on offers again. So what's going on? Well, I think we're going to have to end the stream before all of the fun ends, huh? Because we got 15 minutes left, and this still looks like it's got a good 90 minutes of this sort of stuff left, huh? Maybe we should reset it right there. Okay. Whoa, you see some stops into 27 half in the 10-year. That sucks for them. and then it immediately ticks down. That one, now, interesting on that move, the 10-year led. Only by a tick, but the 10-year, now it's like the 30-year is leading. So we're getting the move back up, and the 30-year is leading it, and the 30-year is breaking new highs. Oh, and Ultra Bond, Lewis is mentioning the Ultra Bond. Yeah. Oh, this is a flattener. If I ever, this is a pancake, man. Oh, that 30 years, so interesting, huh? And the 10 years above the open. Oh, geez, okay. It's kind of interesting how it points. It will kind of seem slow, and then the volume will come out, and I was like, whoa, Nelly. 2,500 contracts at 27.5. Cleared it for a little bit, but it did tick back down, so. Looks like it's going to take at least 3. Yeah, okay. 3K to tick up. The stacking on the bid behind it is pretty solid too, by the way. Like, look, these are all 4s. And these ones behind it from where we were earlier are like 35s. How can you benefit from order close? That's a good question. I'm not sure. I'm not 100% sure. Well, I mean, so one way that we benefit from clustering and volatility is that we know when we get a spike in volatility that we're likely to see more volatility, at least for a short period of time, right? So I think that it's kind of the same thing with orders, is that you can come in and you can say, okay, if there was an unusual cluster of orders, I'm probably going to see more volume in the next little while. And so I might be able to use that to factor into where I think I can get filled, right? Because if I come in and I see there's a certain amount of volume coming through, and then I can look at what the positions in the QR and what the stacking and pulling is to say, okay, based on that volume, they could move 4 ticks in the next 5 minutes, right? So that's one thing that you can do. I think another thing that you can do is you can try and use it to get a more efficient entry by looking for a period where there hasn't been an order for a while. Right? Like, it's been too long, there hasn't been an order, and we have like order flow and balance one direction, and then it's slowed down. Like, you might be able to get a good chance of getting in and being at the beginning of the next trend. Right? That's maybe another theoretically. But I haven't tested any I haven't done any back tests on an edge that was based largely on clustering yet. I think that I really want to understand the math behind the clustering better, because there's a whole type of distribution for it that I don't understand anything about. I forget what they call it. It's like a Hawkes process or something like that. Yeah, so a lot of volume trading at 27.5, which is the point of control for the session. We are above the VWAP again at 26, but okay, and they tick through it. Yeah, not a strong enough stack. 5 year. not cooperating. Although the 5-year is kind of the one that's lagging, so. I'm still looking at this, and based on the volume, I mean, it definitely in the 30-year, it was the case. It may not necessarily do it in the 10-year just because of the spread, but the volume is such that because of the inverse square law, we could see new highs in the 10-year. Maybe even in the 5-year. Well, it would. There's a long way to go back up in the 5-year to make that back up. In the 5-year, it's like, okay, there's your retracement, right? Now, on the other hand, 27.5 is kind of something that we should expect to be a little bit of a magnet. So get traded a lot on the way down there, and we're coming back to it. Mentioned by my tweet, Bank of Canada actually moved the markets. Now I've seen everything. I'm sure that I could go back and find a day where the Bank of Canada moved the interest rate too, but this is, happens, 6-8 times a year? Never once has I ever thought about, recall paying attention to the market after that, and it's creating a big move. Jake Sherman tweets to set the scene. Sienna Mansion and White House senior staff are meeting in a small room near the carriage entrance on the first floor of the Capitol. Reporters are being kept away from the room. And then Manchin is going to say, nope, no unrealized capital gains tax. I don't know what he'll say on that. I mean, I have no clue what his opinion will be. But I feel like, that 30-year has been pushing higher, and the 5-year is really dragging, and the 10-year is just getting stretched. I always say that they're like, they're ladies. It's like, those are her friends, The 5-year, she wants higher interest rates, and the 30-year doesn't. And good old reliable 10, she's not quite sure what to do. I mean, she doesn't want to hurt anybody's feelings. So much for transparency. Oh, you're talking about they're having the discussion in a closed room. Nah, that's the sort of a thing that they need to be able to talk in private with the White House. I think so. Yeah. It's kind of ironic. The thing with transparency in government is that when you start pushing for transparency, it doesn't actually make the things that we're concerned about transparent, but it does make things that we probably don't need to know transparent. You know what I mean? So you get the worst of both sides of transparency. You know, like there's this whole thing about Joe Biden meets with somebody, it has to be in the White House logs. But if he meets with them outside of the White House, then it doesn't have to be on the logs. Okay. You know? Okay, well, looks like it's time for me to get going here. They're still kind of playing between 26 and 27.5. And that may just be like they decide to balance it out. So we'll see. We still have an auction today, and I suspect that it will be good. So I don't know. The way that they were trading this morning, I felt like that was because of the 5-year auction. And the 2-year auction yesterday was pretty good. And generally speaking, it tends to move up on auction days, right? So I don't know. We'll see. It's still a little slippery there between 26 and 27.5. So if somebody's really going to buy it up, they're probably going to wait. So, but I think it's time for me to get going. I will see you guys tomorrow. Thank you so much. Fun day, I guess. I mean, I did make money in the end, although it was a little stressful. And I haven't taken profits on it yet, so that's a big part too. But see you tomorrow. Stay profitable, friends.